Hello and welcome to the Rask Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information.
Welcome back to the podcast and welcome back to our summer mini-series of how to build a business in 2025. Jordan and I are running through all the foundations of how to build a business, everything from starting with your why, finding your purpose, through to the basics of building those business foundations, into how to market, how to launch, and how to scale your business. So today we are diving into the business foundations. So building the business foundations around structuring your business properly from day one, understanding funding, whether it's grants or investors, how to kind of understand the Australian tax system, compliance requirements, and everything from setting up essential systems for your operations and accounting and software. So Jordan, hello.
Yes,
how are you?
Hello. I'm good. How are you? All the fun stuff that you made fun of in the last episode.
Yes. It's okay.
It is bland. It is boring, but super important, especially when setting up. Because you don't want to get this stuff wrong.
No, you don't. And I think there are a lot of businesses that do get it wrong.
Yeah. And it can lead to failure.
Yeah. Why do you think most businesses fail? And maybe we should put a caveat on that. Not a caveat, but the statistic behind it is that, is it 40 or 60% of businesses fail and don't make it to their 5 years?
Yeah, it'd be something like that, if not higher.
It's huge.
I think it can be a couple of things. One, cash flow. Cash flow is always an issue, whether it's money, your product's not selling. Well, have you got enough money to advertise? Is all of that done? And I think too, as well, when you go into business with someone, I think a relationship breakdown is a big thing too. I see a lot of that, where if you are in business with someone and you don't always see eye to eye, that can be a big thing, and that can blow up very quickly too.
Yeah, interesting.
What about yourself? What do you think?
I think probably maybe tapping into what you said about the finances, but I think maybe not understanding your finances, as in not having that financial literacy that's so important when you're running a business in terms of cash flow, budgeting, financial forecasting, understanding profit margins, understanding what's coming in and going out every month. I know that there's, you've spoken about it before, there's a few businesses, few industries that can quite often get caught out when kind of the BAS or their tax is due.
Yep, for sure. And I think something else that's underestimated or isn't spoken about a lot is trading terms. An example of that, it's common in the service-based, in service businesses, where let's say we do a job, it takes us 2 weeks to do a job, and then we bill that job. So we've incurred costs for 2 weeks, and then we send that bill to the client. If our trading terms are 2 weeks, well, we're not getting paid for a month from the first time that we've started to absorb costs. So I think really understanding cash flow is super important, but we'll touch on that today.
Yep. Yeah, for sure. So I guess maybe the first thing is cool, based on last week's episode, we sort of talked about, cool, now you've got the idea, you've validated the idea, you know that it's something you want to move forward with and it's the right decision. Now it's actually finding out what the right structure is, what does your business makeup actually look like? So maybe we can kind of talk through, George, a little bit about sole trader, partnership, companies, trusts, all of these kind of key lingo words that get thrown around.
Yep. Caveat on this, there's no cookie cutter approach. Everyone's different. Every business is different. But to start, just to run through those things. So sole trader, super easy. You can do an ABN application online. Costs you essentially nothing. Only issue is it's yourself, so you can be personally liable. So I think that's a big con. I'd never suggest this. Personally liable, you can be taxed at the highest marginal tax rate. And there's heaps of there's personal liability. For me, that's the most important thing. Partnership is the same, where you do go into partnership with someone. It's essentially a sole trader times 2, where you can push income to each of the partners. Now, companies and trusts is probably the most common thing that we see, where company can have a capped tax rate. There's There's limited liability too. So there's a degree of separation between the director shareholder personal assets. And the same for the trust too. I've done an episode where I've run through all of these, but I just want to keep this one high level. And if I can touch on it, I think once what we spoke about in episode 1, and once you've done that, you've solidified your idea, you've gone to all this effort and spent all these hours, we always suggest setting up your structure properly from the start. One of the most common ones, again, doesn't necessarily mean it's right for you, is a company with a trust shareholder. So we generally see that. Sometimes we see a company with a holdings company and then a trust shareholder in that holdings company. It just depends on what you're doing. But I would really strongly, cannot stress enough, to speak to your accountant or whoever your advisor is when you are starting out, because you do want to get this right. Because if you don't, there can be some serious capital gains issues further down the track if you do roll over into a company or into a trust. So I just, can't stress enough.
What's the difference between a company and a trust?
A company can retain profits and it pays tax at the company tax rates, either 25 or 30%, whereas a trust is a flow-through entity. So it can't retain any profits and it needs to pay out any profit to the beneficiaries of that trust. Now you can have corporate beneficiaries, they can be individuals. So again, not a cookie cutter approach. Strongly suggest reaching out to your accountant or reaching out to an advisor and getting that structure set up properly from the start.
Yep. Okay. That makes a lot of sense. And then I guess the next thing, obviously, and probably the thing that people are most commonly familiar with is like setting up an ABN and registering your business.
Yep. So whether you're a sole trader, partnership, company, or trust, you do need to set up an ABN. Now, if you are turning over more than $75,000, you will need to register for GST. Now, just to be clear on that, it's not money left over after expenses. Think of it as invoices going out or cash being collected. As soon as that hits 75K, you need to register for GST. It's also important to have the right insurances in place. Now, at a bare minimum, if you're paying wages, you need workers' compensation, and that varies from state to state. If you're giving advice, you want to look at professional indemnity. Public liability is probably a non-negotiable as well. But specific industries have specific insurances. So also reach out to someone there and make sure that you set up all of your insurances correctly from the start.
Yeah, interesting. And you just said that once you hit $75,000 as a business, that's when you would register. So you don't actually need to be registered for GST before hitting that threshold. Is that correct?
Yeah, correct.
Okay. So as a sole trader or a company, you could essentially invoice up to $75,000 and that's when you would register for GST.
Yeah.
Is there any benefit would you ever register before you hit that $75,000?
You can. If you think for that financial year, you are going to hit that 75K, then you can register early and get like small refunds for expenses you're incurring along the way. But yeah, it just depends on if you think you're going to hit that threshold.
And then you talked a little bit about insurances. Are there particular industries that certain insurances would are more, I guess, important?
Yep. I think if you have wages, if you pay out wages, regardless of industry, you need to have workers' comp, public liability. In the trade space, you may think about insuring your tools. If you have expensive tools, again, workers' comp, public liability, non-negotiable. If you're giving advice, you want to have professional indemnity insurance. So your PI, so that can cover you for anything that you say that could be incorrect. Pretty sure that covers most of the basic ones, but you can have really niche ones too.
Yeah, interesting. And so this is information that you should be able to get from a regular accountant.
Yeah,
really.
A regular accountant, if you have an insurance broker, they can help, but your accountant will be able to guide you in the right direction.
Yep. Okay. And obviously, in terms of those steps of like bringing an accountant on board, this is the stage that you would do it when you're at the point of setting up your ABN and registering your business?
Yep, for sure. For sure.
Yeah, okay.
Before you open any bank accounts, anything like that, and you get serious, start injecting some money, I think it's important to consult with an accountant.
Yeah. So essentially just make sure that you've got going back to that structure of the business, making sure that that's solid before you then move into the next phase of, invoicing and actually executing the work.
Yep, for sure.
Yep. Okay, interesting. The other thing that I thought could be a good thing to touch on is obviously some changes that have happened to the 2024-2025 budget that if you are starting a business, then you might not be aware of this because there's, you wouldn't have been paying attention because you weren't a business owner. They wouldn't have been relevant to you. But there have sort of been a few changes that can help ease things for business owners and just kind of support them through the next kind of, or the next 6 months of this tax year. And I think the first thing is the small business instant asset write-off extension.
Yep. So that got extended for the whole 25 financial year, where you can immediately write off, so claim a deduction for any assets up to 20K. You can write them off immediately as soon as you purchase them. Whereas anything over and above that, you'll have to depreciate them over the useful life of that asset. So previously with COVID, you could just write everything off and everyone was writing everything off. Whereas now you can't do that.
Mm-hmm. And so what would be some examples of something that would apply in this instance? I guess vehicles?
Yeah. If it's under 20,000, a vehicle.
Yep. Mm-hmm.
Cameras. Okay. If you're a photographer. Again, depending on your industry, then it applies to everyone. Everyone would be able to utilize it. But things like computers, if you spend a couple of $1,000s on a computer, you can write that off straight away. So it's pretty much endless on anything under 20K. Anytime
I hear the words write-off, I think of that episode of Schitt's Creek where David's talking about a write-off, and we'll put it in the show notes because it's a very funny little clip. But essentially, David starts a new business, like a homewares accessory store with selling lamps and skincare and all these kinds of things. And he buys a whole bunch of product for research. And his dad's a business owner, runs a business. And he gets all of this skincare and all these sheets. And his dad comes in, he's like, why are you buying all of this product? What is all of this? And David's just like, it's a write-off. It's a business write-off. And his dad is like, what do you mean? This isn't a write-off. Anyway. I've gone on a bit of a tangent, but every time someone says write-off, that's where my brain goes.
That's your dad from American Pie. I've just Googled it. I didn't know the show. just
really
seen
funny.
It.
Yeah.
But yeah, sorry. I should also say that it needs to be business related, and you can't just buy anything.
Yes.
And, to piggyback off the show that you're talking about, it needs to be business related.
Yeah. Yeah, absolutely. Cool. Is there some things that you would say very commonly can be mistaken for being business related that actually aren't?
Yeah. Going out for lunches, going out for dinners. Yeah. If it's not held on premise where your office is, you have to pay fringe benefits tax. So if it's not work related, and it's not that hard to work out, use your brain. If you go, oh yeah, it could be, it's probably not. So just be conscious of that. And look, even if it is, if you're not sure, and if you spend the money on your business account, your accountant will be able to make that a personal expense anyway, so they can identify it.
Okay, and then they can just move it into a different section.
Yep, into a director loan account. But anyway, that's too boring, boring.
Too deep.
Yeah. Want to keep it high level.
High level. That's it. Cool. Okay. So the instant asset write-off was extended in terms of other small business programs and things out there. I mean, I've heard of the energy bill relief. I don't know if you can provide a little bit more on that.
Not really, to be honest. I mean, I'm guessing it's similar to the personal one that they've got in New South Wales. They've got a energy relief where you can get a certain amount of your energy bill back, and they do the same for tolls in New South Wales. I don't know if that's the same in Vic, but they do have that program as well for businesses. What else have they had? It's usually the state government that has this type of stuff where you get some money back. But again, it just depends from state to state. But what I would suggest is log on to your state government website, and they usually have a section for businesses, and you'll be able to see what's available to you, because some of them even have grants.
Yeah, absolutely.
Just depends.
Yep. Yeah, that sounds amazing. Cool. Okay. Well, yeah, and maybe we can even just drop a link in the show notes for that as well.
Yep.
Cool. I think the other thing that we'll drop in the show notes that we were kind of chatting about the other day was having essentially a checklist for if you're starting a business in Australia in 2025, what to do in order. Obviously, we're kind of talking through this, but we are kind of going on little tangents and kind of bringing in other things as well. So if we'll put a checklist in the show notes for you, which will essentially bring all of these 4 episodes of this mini-series together.
Yep, perfect.
Cool. Okay, so great. So kind of choosing the right structure. Next thing is obviously thinking about like financials, how to manage business financials. Obviously, that's the hardest thing. It's something that we spoke about before, is one of the core reasons that businesses fail. And when we say core reasons, most businesses, up to 60% of businesses in Australia, which is huge. It's a huge number. So if you can kind of really get on top of your finances early and understand that, obviously it's super important to the success and the scalability of your business.
The most important. When we're starting out, a lot of people just focus on sales, and bringing in revenue. If you can make a conscious effort to go through and do a cash flow projection or budget or whatever it may be at the start, you'll just reap the dividends in the long run. You need to be able to plan for these expenses that have come up, whether it's how much your stock's going to cost you or what it's going to cost to put a car on the road, how much tax you're going to have. You want to have to pay. You want to have somewhere that you can look and it all be there in one spreadsheet.
Yeah. What are some of the things that you should be tracking? Like regardless of industry, obviously different industries like have different things in terms of vehicles and those kinds of things. What is kind of some of the non-negotiables relevant to every business?
Everything, to be honest.
Okay.
If we look at the spreadsheet, I think we're going to put it in the show notes, that spreadsheet that Dan's put together, that breaks down the whole business from the profit and loss statement to the balance sheet. You can put all of your numbers in there. And I think it's a non-negotiable for any business owner to be able to sit down, look at a spreadsheet, and it really does summarize everything that's happening in the business. And people think, that it's just numbers. Well, it's not, because that can dictate hiring decisions. It can dictate whether you bring on new products. Do you have the capacity? Cool. We're going to spend all this money on marketing. Can we fulfill these orders, or can we deliver this service? Not sure. Well, what is it going to cost us to bring on an extra person? What's it going to cost us to put them in a car, or to get more equipment so they can go out and fulfill the service that they're delivering? So I think it's the most important thing. I really do. And probably a bit of bias because I'm an accountant, but from what we see, I just can't stress it enough to get on top of your cash flow and have some type of budget in place. Yeah.
I've just pulled it up just to run through some of those things. Obviously, like the very basic things that we talk about and everyone kind of thinks about is like marketing and sales, how much money you're spending on bringing work into the organization, whether that be with an agency, whether that be through paid advertising, whether that be through letter drops, whatever that looks like. And then obviously sales. But then I think it's like those like operating costs, like do you have contractors? Do you work with, freelancers? Where does that kind of fit in? And then some of the other things, which I know initially I hadn't really thought about in terms of like general admin, like bank charges and like office supplies, and obviously subscriptions is relatively common, but bank charges I think was an interesting one for me.
The important thing with that is, especially now, because everyone uses FPOS, like if you're getting charged 1.5% or 2% on your top line, and your top line's $100,000, that's $2,000 a month for nothing. Yeah. Not for nothing. Like, yes, you're getting paid. I think it's for nothing. We shouldn't have to pay merchant fees. They're ridiculous.
Well, they are doing a bit of a.
I saw that.
Yeah.
So they should. Yeah. That's absurd. Some of those fees, but again, you want to stay on top of that.
Totally.
So if you are paying 2.5%, 2.8%, if you can go to someone else and pay 1.5, well, that's straight to the bottom line.
Yes. Yeah. Obviously, for sure. And just some of the other things in here is obviously like operating expenses in terms of like parking, taxis. Are they involved? Is there any accommodation that's involved? Are you kind of flying team members places? Equipment hire, insurance, vehicles, obviously salaries, but then occupancy costs as well, rent, electricity, telephones. Do you have a sales team and do you pay for their telephones?
Yeah, for sure. And the interesting part about that spreadsheet is actually the bottom part. And I think it's the most valuable because people generally understand most of the top part with that profit and loss statement with the budgeting, but that bottom part is where all of the cash movements really happen. So things like your tax payments, how does that affect your cash flow? If you have motor vehicles on lease, that doesn't actually sit in the P&L. The cash movements sit at the bottom there. And that spreadsheet that we've got, it helps itemizing all of those things. So that way you can see the net cash position at the bottom. Now, if you're listening to this, it may be a bit hard to follow, but we've got a link in the show notes. Yep. So I'd strongly suggest jumping in the show notes. I think it may even take you to the free community we have where Dan actually does a run through.
Yes.
Of how to actually action it and put your data in it. So check out the show notes, join the free community, and you'll be able to download that spreadsheet, and then you'll be able to follow Daniel as he works through it. Which is, fantastic. And I think every business owner should do it.
Yeah. And I think that's important. The video in there of like Dan, who is an accountant actually talking through how to use this spreadsheet, because if you've never seen one of these before, whoa, holy guacamole, that can be some overwhelming, confusing stuff. Yeah. So yeah, if you actually want to understand it, then join the free community. And I mean, there's heaps of resources in there, but that one in particular is really, really valuable.
Yep, couldn't agree more.
So I mean, while we're kind of on the topic of cash flow and money and those kinds of things, the other thing I guess to talk about is early stage funding. And like grants.
Oh, yeah, it's an interesting one. And it's sometimes a really hard conversation as an accountant anyway, where people will come to us and go, oh yeah, we'll just get a bank loan. It is so hard, next to impossible, to just get a bank loan for a new business.
Yeah.
It really is. And a lot of the time it's either 9 times out of 10, you're bootstrapping and you're funding it yourself.
Yep.
Sometimes there are grants again, but for inverted commas, a normal business, like a service-based business, or if you're doing an e-com business, and if you're not doing anything, not to say groundbreaking, but anything that's very left field, you're not going to get any grants from any state government or anything like that. So it's a hard one. It's a hard one. And from the bank, if you don't have a property and you're not going to put that property up as collateral for the business, you're not going to get a bank loan.
Yep. Yeah. And that kind of thing is pretty scary.
Yeah. Especially like if you're unproven or untested as a business owner or in your field, and you're going to go and borrow $100,000 or $200,000 against the house that you live in that keeps you warm at night. Yeah, it can be a tough one, because if the business fails, cool, that bank loan's still going to be sitting there. So I'd be very conscious of that. And even at the start, sometimes people can bring in shareholders, and those shareholders can help fund the business. Just be conscious of that too, because at the end of the day, it may be a good idea at the start when that company's worth nothing, but if that company gets to $2, $3, $4, $10 million, you've given some of that pie away. So just be conscious of that too.
Yep. Yeah, I think that's a really good point. In terms of bootstrapping, maybe we can kind of explain that theory, or like what that actually is, to people that might not have heard of it before. Essentially starting as lean as you possibly can, right?
Yeah, perfect summary. As lean as you can, really focus on building the new business, getting the products out there, prioritizing experiment as much as you can, trial and error. That customer feedback that we spoke about in that first episode, super important. And then just develop as quick as you can. Essentially, starting a business with as little money as possible and trying to move as fast as you can.
Nice.
Yeah.
And I guess part of those things is also like risk management. And obviously, if you have a lot of investors and you've taken on a bank loan and you've got like your house as collateral, there's a whole ton of risk involved. If you can just, going back to the first episode where we talked about like idea validation and getting that essentially proof of concept that your idea is something that people want, if you can reduce that and that risk in those early days by having that validation, then initially, again, it's going to be so much better in the long run as well, because you're not, like you said, you don't have your house as collateral. Yeah,
that's it. And that would put on so much added stress on your plate, especially if you're an established business and you know that you're profitable. It's a different conversation. If you're going to draw money from your house or another asset that you have, and all for it. But if you're just starting out and you're unproven, the amount of like, take the financial side out of it, the mental stress that will cause you.
Yeah, of course.
Like in terms of like staying up at night, it cannot express enough how stressful it would be if you are starting out, and it's all or nothing.
Yeah, absolutely. And I think on top of that as well is like the lack of flexibility, or the increased flexibility that you have if you kind of go with this really lean startup kind of bootstrapping phase, is like if you have less involved in the beginning, then your ability and your adaptability to kind of move and pivot the business or the service based on the direct and real-time feedback that you're getting from people is going to be so much easier, rather than if you've gone with investors, you've got shareholders, you've got, all of this stuff essentially involved that's you kind of have to adhere to, really.
Yeah, so true. It's so true.
Yeah. Yeah, it's interesting because I think there's just, there's a lot of different ways that people can go about starting a business. And I have heard, I'll just get a bank loan. But I mean, who wants a bank loan unless you've actually confirmed that people want to be involved with your business and you're actually going to make money out of it?
Yeah, especially if you're pre-revenue. That's ballsy, gutsy.
Yeah. And pre-revenue means before you've got any money in your business, you've taken on a bank loan. So you already have repayments that you're accountable for.
Yep.
Okay. So the next thing that we kind of want to chat about, or the third segment of today, is setting up the software, which is really thinking about like, cool, you've got your systems in place, you know, kind of how you're going to do it. It's like the next phase, the next step.
Yep. To start from the top, and the software that we always speak about, Xero or some type of accounting software, you want to have that set up from the start. You want to, I guess, to take a step back before you even set that up. You want to have your business bank account set up properly. So a minimum of 2 accounts. Have one account where it's your business trading account, completely separate to your personal accounts now, nothing to do with your personal ones. So you'd have like a business trading account, and then you'd have a second account, and you can use that as your savings account. And we can call that the BAS account, the business activity statement account, which is where you pay your GST and your PAYG and whatnot. So I think that's at a bare minimum from an accounting and cash flow perspective. A lot of the times when we go to do a BAS for a client, and we'll say, hey, Zara, your BAS is $10,000. And they'll go, oh, what? How? I don't have any money or any, it's all gone. I don't have anything. Well, you should have been putting the money aside. And that's 2, it's your fault, to be blunt. A lot of the times we hear, this is wrong, it can't be right. It's because you don't budget properly. To reiterate that spreadsheet, if you're doing that type of stuff, the real smart business owners, they know what their BAS is going to be. They do. And if you're not sure, set that second business bank account up, speak to your advisor, speak to your accountant, and work out how much to put in there every week. So that way your BAS is covered and you don't have any nasty surprises every quarter.
Yeah, that's a really good point. Yeah, I know I've heard some stories from you guys just of that happening and being really common. Just business owners being surprised and not factoring it in. And then obviously if you're a sole trader, having all of that separate to your personal account.
Yeah, for sure.
Because you don't want to go out for your partner and pay for dinner out of a work account.
Amen to that.
Accidentally, yes. Okay, so accounting, and then there's all the legal stuff, right?
Fun stuff. Yeah,
contracts.
Yep. Staff contracts. If you're hiring contractors, you want to make sure that you're covered there as well. Super. Speak to your accountant when hiring contractors on how super can fit in there. You just want to get it right from the start.
Yep.
You can get consultants, can get expensive.
Yeah. I mean, in the past, I have used consultants. We used a particular organization that it was for like employment law, just in terms of contracts, and we were changing things around, and just wanted to make sure that we had it right. For us, but also for the employees, that they were getting everything that they were entitled to. And there was a bunch of changes going on in that year in terms of employment law. And so it was just handy. We paid on like a monthly retainer. We used them for, like 5 months, just as things sort of popped up. And it worked for us at the time.
Yeah, good stuff. I would suggest reaching out to someone just for your basic stuff, like your contracts, your terms of service, T's and C's, just stuff that's going to cover you if something does go wrong.
Yep. And I think the other thing as well is, obviously that's just kind of like the baseline, but then in terms of like e-commerce products, there's also like a lot of like consumer laws and, around product safety regulations. There's also just stuff around like consumer protection in terms of like warranties and refunds and those kinds of things. Yep. But there's also things to be aware of in terms of like skincare and food and any like natural products, like naturopathy products and those kinds of things that you want to make sure that you're complying with all of these kind of regulations. So I think the legal is a pretty big one. It's something that isn't exciting, but it can make or break the business.
Yeah, for sure. It's so important to get right.
Yeah. And then I think going further into the e-com side of things is obviously like the sourcing, production, manufacturing, finding suppliers.
Yep.
Are you going to start looking, and this is part of that research phase as well, like, are you going to source products and materials from Australia, or are you going to source them overseas? And then how do you make that decision? Like, is it based on cost? Is it based on delivery timeframes? Cool, something might be cheaper overseas, but what is that turnaround timeframe like? And how does it get here? And not just how long is kind of the shipping, but if it is being shipped, how long is it going to be waiting on a dock before it kind of passes through customs? I think are all of these things that are really important that I've worked with business owners before that have planned a product launch on a product getting there at a certain period of time. And then it just got held up through customs. And then the product launch was pushed back. And obviously all of the messaging and comms was that this thing was going live. So obviously we were able to, you can kind of tweak it, we were able to tweak it with like a pre-sale and those kinds of things, and wait lists. But yeah, I mean, it's not something you want to be doing on the final hour. But yeah, I think, also thinking about if you are manufacturing products, clothing, what is the turnaround time, or what is the back and forth of if you're creating a product, how many reiterations do you get if you don't like the product? Yeah. What is that back and forth timeline? Again, I've worked with Australian business owners in like the retail space who design their own products, have them manufactured overseas, and then, by the time the sample gets here for someone to kind of try, and then the notes go back, and then the next sample comes and the edit phases happen. Just there's a lot involved, obviously, in the e-com side of things, and then just being able to manage your stock is the other thing. Like accurately tracking, super critical, obviously, because you don't want someone to buy something that you don't have. Yeah,
it's so true. It's so true.
Yeah,
and it's interesting, and it all really does tie into what we've spoken about today, more so on the finance side of things. But whether it's inventory, it's your warehousing, returns management. It all comes back to cash flow, and like how you may ask, well, it's all about timing and what it's costing you, because there's opportunity cost as well. So it's just so important to be able to map these things out and have a really thorough understanding, especially if there's inventory at play and suppliers, and is there a trade war going on? How long is it going to take to get a container here? If it's coming by boat, what's that going to cost us? It's so important to factor in the time and also the cost of all of these things too.
Yeah. Absolutely. And obviously there's a lot of changes happening within the US as well, which actually, impact the tariffs that we're going to be paying in Australia. So all of those things are really important to consider. If you're thinking about starting a business, how's that going to look like throughout the rest of 2025? And is that going to impact your industry and where you're getting product shipped from?
Yep, exactly.
Yeah, absolutely. Cool. Well, I mean, I think that was a good episode. And then as always, if you have questions for us, all the links are in the show notes. The best place to ask your questions is in our free community, which is an Inflection community. It is a place where there's hundreds of business owners sharing ideas. We all are in there on a daily basis. If you have a question for us, whether it be if this is the right business structure for you, we can provide general advice. Obviously, we don't know the depth of your business. But we can kind of point you in some directions. We can give you some questions to start thinking about and give you some resources. Again, if you just have questions about, is this the right decision? Should you be bringing other people in? That's what we're here for. We're here to help you essentially make the right decision so you can build a successful business. Because Australia is built off small business.
Amen to that.
What's coming up? What's next week, Jordan?
Next week, it'll be our third episode in our little mini-series. Where we're talking business
Quotation marks, mini-series.
Quotation marks, mini-series.
It is a mini-series.
It is. I like it.
Yeah.
We're talking business launch and marketing. So lots of you talking and lots of me nodding. And I think it's important. It's really important as well just to follow the flow of what we've already spoken about. But once you're there, we're going to focus on building your brand, developing that marketing plan. So important for when you do want to grow that business. Pre-launching, launch strategies. So we'll cover all the fun stuff. Marketing. Everyone loves marketing. No one loves finance.
Once you understand finance, I think you love finance.
Amen to that.
Love's a strong word, but appreciate finance.
Appreciate. Good stuff.
Nice. Thanks, Jordan. I'll talk to you soon.
Thanks, Zara. Take it easy.
Thanks for watching this video on the Rask Network. While you're here, don't forget to like and subscribe so you can get videos each and every day on business, finance, investing, and so much more.